You're calling 2016 the year of the boomerang. How come?
Janet Yellen threw her tightening boomerang in December, and it's going to go out and it's going to come back and hopefully not hit her in the head. But I expect the Fed will ease before the end of 2016. Now, just to be clear, they're going to tighten a couple more times. I would expect March and June. That's the tempo they've laid out. They said it's data dependent, but they said, look, 100 basis points a year. They have 8 meetings, 25 basis points per raise. So that means every other meeting for the next 3 years, get up to 325 basis points, and then you're in a position to cut if you have to. And of course, Larry Summers made the point, you're not going to get there. We're going to have a recession before you can raise rates enough to cut them enough to fight the recession. That's the Fed's big dilemma. But by raising rates at all, they have increased the odds of a recession. So they're going to raise, I expect, in March and June. By August or September, even the Fed will realize that the economy is extremely weak. They are the last to know because they're model-driven. If you have the wrong model, you'll get the wrong policy every time. If you throw out the models, no, they are obsolete and they're very defective. They're good people. I know a lot of the governors and the staff. I mean, they're smart, good, hardworking people, but these models are completely obsolete. If you look at actual data, I mean, it looks like 2015 GDP for the full year is going to be about 1.95%. That's below everybody's forecast. Now, Yellen, go back to last May, May 22nd, she gave a speech in Providence, and to me, she laid out her whole playbook, took all the mystery out of what the Fed's going to do. She said, our forecast is 2.5% growth, 2% inflation, 5% unemployment. And we want to act before we hit there, so you fade them a little bit, and it has to be trending. So if you sort of see, 1.8% inflation and 5% unemployment and 2.3% growth trending the right way, she was going to raise rates. That's what she thought she saw in December based on her models. But actual data is coming in extremely weak. The scariest thing I've seen, Eric, is exports and imports are both declining. People look at the trade deficit, the trade surplus, how it adds to or subtracts from GDP. But the scariest thing, we haven't seen this since the Great Depression, when the absolute level of world trade is declining. That's what's got Lagarde scared.
The same thing's been happening in China, actually,
yes.
Which is striking. I mean, normally with the strong dollar, for example, going back to the United States, you'd expect exports to decline,
right?
But imports to increase. We'd be able to buy more stuff,
right? But our imports are going down also because consumption's going down because the economy is so weak.
So let's assume you're absolutely right. They raise a couple of times, and then they have to back it back down. How bad is that? What does that do to the markets? Do they lack confidence at that point?
Well, just to be clear, they're not going to be able to cut rates because now we're talking September, right? So this is when the boomerang comes back. This is 60 days before the election. If the Fed cuts rates, Janet Yellen's a well-known liberal labor economist, and
it's political.
Right, it's political. So if she cuts rates in September, Ted Cruz will burn down the Fed. I mean, it'll be impossible, which means they will not be able to cut rates until December at the earliest. So the other form of easing is forward guidance, which you just talk your way through it. You say, okay, we're done for the year. So I consider forward guidance in the easing toolkit. So my expectation is by September they'll say we're done for the year. That's a form of easing. Markets might actually rally on that because it signals that they might be cutting back to zero, and they'll only be the 8th major central bank raise and go back.
Let's take a look. And we do this sort of year-end thing with you every year.
Right.
And I do want to point out that last year you said the 10-year Treasuries would be a decent investment, and 10-year Treasuries were a great way to preserve capital this year. You can see here the yellow line is Treasuries, the blue line is corporate bonds, which came pretty close, but certainly didn't deliver the premium you'd expect from a bond relative to Treasuries. And then we've got stocks, and then we know what happened in high yield. But the point here, of course, Jim, is that risk is not producing reward in financial markets today. Is that a scenario you expect to be repeated in 2016?
Actually, I think that I still like the 10-year Treasury. Here's the thing with the 10-year Treasuries, Eric. I look at U.S. Treasuries at about 2.3 and bonds, close to zero. Something's wrong there. I understand that inflation expectations are higher in the United States, but that's a huge spread between two comparable credits for the U.S.
Well, it's being very deliberately distorted by Mr. Draghi.
Right, and Ms. Yellen. I mean, the thing is, all the central banks are in this game. They're just passing the canteen. 2009 was the weak yuan, 2011 was the weak dollar, 2013 the weak yen, 2015 the weak euro. This is currency wars. This is just passing the canteen so everybody can take a sip. But the global monetary elites have not figured a way out of the debt trap, the classic debt deflation scenario that Irving Fisher laid out in the 1930s. There's no way out of it. Except structural reforms. By the way, there is a way out of it, but this is Adair Turner is sort of a brilliant guy, kind of stalking horse for George Soros. Debt monetization is the way out of it. This is helicopter money. So what you do, you run bigger fiscal deficits. That way you have to spend the money.
Well, exactly. I mean, there is something besides monetary policy.
Correct.
There is fiscal policy.
Right.
And you could have a massive infrastructure. Theoretically, you could have a massive infrastructure investment in the United States. There are things we could do with money and infrastructure in this country which would be pretty welcome.
Right. And that's been on hold for 4 years because
yes.
the 2009 stimulus discredited the idea. But the problem is the 2009 stimulus, and Summers would say this, was badly designed. Only a sliver went for real infrastructure. A lot of it, went for state municipal salaries, candidly.
Jim, I want to give people an idea of what you consider to be a good investment, perhaps not in the immediate term, but over time. And one thing you flagged is water.
Right.
Which I find very curious, because you're a big fan of real assets, and we could call water a real asset even if it's hard to get your hands around, if it's not frozen. This is the question I have for you. I like the idea. Look, I come from a country that's rich in water resources, right? Canada. And lots of people want it. But the problem is it's hard. Water is controlled by public utilities largely. It's hard to invest in. There is an ETF that tracks companies in the water infrastructure and equipment business. Guggenheim runs it. And it has dramatically underperformed the S&P 500 over the past 5 years.
Right. The problem is you're investing in utilities, by and large, pumping systems, which are all controlled by state and local regulators, and they have limits on the tariffs. Look, water is a global commodity. Oil is a global commodity, right? When you want to put gas in your car, do you drill for oil in your backyard? No. You go to the gas station. Where did the oil come from? Probably Venezuela or Nigeria. That industry has had 150 years to build out the infrastructure of tankers, pumps, refineries, trucks, etc. Nothing comparable exists in water. It's local, it's regulated, it's political, it's subsidized. We're lacking the infrastructure. But there's a serious side to this, which is drought. We all know what's going on in California, Beijing, Texas,
Sao Paulo,
all around the world, and we're going to have the World Cup in Qatar with 9 air-conditioned stadiums. Where are they going to get that water? So the point is, this is starting to change, and the real bellwether was Saudi Arabia. Because they're losing their oil revenues are down so much, they're reducing subsidies to address their fiscal situation. They're taking away some of the subsidies on water. So the price of water just went up significantly in Saudi Arabia.
So how do you invest?
Exactly.
How do you invest in water then?
Well, just to declare interest, Eric, my son is running a company that's the co-inventor of the world's first water cost index. His partner is IBM. IBM is the calculation agent. So this is the Case-Shiller or the Dow Jones of water. And they talked to Harvard Endowment. Harvard Endowment wanted all of their products because they said, hey, we invest in water all over the world, but we have no benchmark. We have no way of knowing what we're doing. So this water cost index is a way to understand your performance and see.
Well, that understands it, but how do you invest in it?
Well, we just did a deal. We bought portable desalination plants. We put them in the desert in Saudi Arabia, so we have a monopoly position selling water in the desert. And we did that deal before Saudi took away the subsidies. Now that the price of water is going up, we get the government price, so our revenues went up significantly with no increase in our costs.
But for the economics of sort of coastal or desert desalination to be borne out, people have to be forced to pay something closer to the market value of water. Well, like in California, for example, there's a reason people aren't conserving water. It's because they don't have to pay for it.
Right. Except now they're being forced to conserve, and neighbors are spying on neighbors, and they're ratting out people, watering their lawns.
Well, that's one incentive.
Well,
right?
that's the other side of the coin. If you're not willing to let it move to a market price or pursue market-based solutions, you are going to get this kind of severe rationing, and there'll be a political backlash against that. This is a big problem. It's a global problem, but it's happening.
But there are real social problems with going to a purely market-based approach to water. So rich people get to drink a lot and poor people can't drink.
Right.
That's not very palatable.
Right. Well, I've raised money and counsel in the private side of this, and we get beaten up by the NGOs. They're like, you guys, water is a human right. And I was like, okay, it's a human right. People should have water. Our private sector solutions will get more water to people faster than the UN talking about it for the next 30 years.
Julius Baer Group, this is Switzerland's third largest wealth manager, after UBS and Credit Suisse, of course, is going to be paying the U.S. Justice Department almost $550 million to settle an investigation into how it helped Americans evade taxes. This announcement comes as the DOJ concludes a disclosure program in which about 75 Swiss banks avoided prosecution by paying more than $1 billion and disclosing how they helped U.S. clients cheat the IRS. Julius Baer shares are up more than 1%. It does pave the way, Jim, for more settlements. Is this the end? I mean, is this the final chapter in the whole numbered account Swiss bank secrecy business?
Oh, I think it is. They don't even want your money. This is news because it was announced today, but these cases have been around for years.
Yes.
The IRS is going one, the Treasury is going one by one. But if you go to Switzerland today, they don't even want your money. An American citizen cannot open a bank account in Switzerland. Like, you're too much of a headache. I look at this in a slightly broader context. Eric, I do a lot of work in the national security threat finance area. And this is part, no one has any sympathy for tax cheats, and the Treasury needs to do what they're doing. But this is part of the U.S. throwing its weight around in ways that could have...
The extraterritoriality?
Some blowback, yeah, because people are building systems completely outside the U.S. dollar system.
Yeah, the thing I wonder about is there are still people with a lot of money who would rather not pay taxes.
Sure.
So if they're not taking it to Switzerland because the Swiss banks are not paying, taking the money, where are they going?
Well, I mean, it's fairly easy to open up accounts in the Cayman and
exactly.
British. There are legitimate tax dodges out there, like putting your money in a Swiss bank account and hoping no one finds out. That's not the most creative way to. That's illegal. I guess as I was a tax counselor to Citibank for 10 years, there are legal ways to avoid taxes, and I think the better advised people figure those out.
In fact, there's a great story in the New York Times
about how
there's a very active industry financed by multi-billionaires on how to avoid taxes.
Very wealthy people, legally not paying taxes. Right. So, Julie, what do you have for us?
Not only consumer, but consumables is what I'm focusing on here. You like that?
Time to eat.
So, exactly. So we're looking at Conagra as one of these that Bloomberg Intelligence has highlighted because Conagra, which has been a maker of private label brands for a lot of other companies, but that's a relatively low-margin business, is now trying to revive its one-time beloved brands like Chef Boyardee and Slim Jim, for example, in an effort to sort of refocus and revive its overall business.
I haven't heard much from Chef Boyardee lately. I mean, they used to be on TV all the time with their ads.
And Snap into a Slim Jim was one of the was their big ad campaign, if you recall. I think with professional wrestlers. Does that sound right?
I believe it. I believe it. So this is a big shift for them?
It's a shift back for them, if you will, after they had made this change over the past several years. 62% of sales now are these private branded items. So it's really been a shift, and now they're trying to return to the core business.
Jim, what kind of chances do you give Chef Boyardee and Slim Jim of making it back into sort of the consumer's staple of?
Well, I think in the United States it's probably a tough sell. We're a little more health conscious and natural conscious, but it's a big world out there, and maybe there's an appetite for them in the rest of the world. They were pretty popular in them not that long ago, so I'm not sure, but I would think they'd have to be thinking globally in terms of leveraging the brands.
Yeah, it sounds like they want to get their margins up.
Yeah,
which is hard to do.
I feel like I have to go back to elementary school to remember when Chef Boyardee and Slim Jim were popular.
It's been a while.
I mean, this is a common theme in the food business as well, looking to the developing markets because the tastes here in the United States and elsewhere have changed. Kellogg is another company that has been grappling with that. The breakfast cereal business has changed as some consumers have sort of moved away from sugared cereals, et cetera, and focused on what they perceive as more natural products. So Kellogg has been already coming out with new products. 2016 is a year in which it's going to introduce even more of them. One of the new products is a sort of cereal in a little bag that fits in your cup holder in your car, and it has bigger pieces, so it's easier to eat on the go. So that's one of the things it has been focusing on. And we actually, at Bloomberg TV, actually spoke to the CEO about not just what they're putting in their food, but sort of how they're approaching globally the issue of climate change and the environment. So I wanted to play what he had to say.
We're taking an end-to-end supply chain responsibility, from the farm all the way to the breakfast table. What that means is we're getting back into the supply chain in the parts that actually have the biggest impact on greenhouse gas, which is the farm itself. And we're finding the ability to work with farmers around the world to put in place climate-smart agriculture.
What's fascinating to me is that these sort of big food companies have not had to use this language, right, until the past several years. It's become important, I mean, not just for food companies, but for corporations generally to focus on these kinds of issues.
Well, one of the big shifts I've seen, at least, Jim, is if you have kids, they talk about it in school all the time. So they're coming home talking about nutrition in a way that I was never taught about nutrition when I went to school. Yeah. But now your children are coming home saying, how many sugar grams is there in this cereal?
Right, although sometimes the meals at school are so healthy, they want to come home and eat some snacks.
That is very true. Very true. A lot of complaining about that.
Healthier living may not be such a good thing for, or may have not been such a great thing for Kellogg's. But I'm just looking at Kellogg's financials, Jim. Wheat's down 18% this year. Corn's down 8% this year, and yet Kellogg's gross margins are frozen at 39%. Are you surprised? They should have gone down, right? Gone up, excuse me.
Yeah, no, I'm not surprised because this is part of the bigger deflationary story that's going on around the world. We're not necessarily in full-blown deflation, it's still disinflation, but prices are still going down. This is a problem with the Fed, for the Fed. This is what the Fed is fighting. So there's a bigger macro story here. It's affecting everybody. A lot of which is really not so much a weak price story as a strong dollar story.
I want to move on to the third company that we're talking about here. Different kind of consumable beverages, Monster Beverage. And of course, this year's going to be important for Monster because of its partnership with Coca-Cola. Is that going to begin to bear more fruit as Monster gets access to Coca-Cola's distribution system, right? That is one of the big opportunities potentially for Monster here.
It's a big deal.
Yeah. Well, actually, there's sort of a thread going through Pep Boys, Kellogg's, Monster, all these things. These sort of consumer non-durables are classic defensive plays when you're going into a recession. So, people will cut corners, try to reduce costs, buy a cheaper brand, and you've got to eat. You'll drink beer, you'll eat some cereal, whatever it is. You might not go to a fancy restaurant. So the point is, as we go into a recession in 2016, these are the brands that are classic defensive plays. So there might be some interest.